Report, where I share my 44 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, I'm going to be doing a recap of what's already happened this week. This is our midweek update, and since there is no video on Thursday, the next time you'll see me after tonight will be Friday as a live stream at 2 p.m. Eastern Time. So in tonight's video, we'll try to set up the rest of the week the best we can so you have expectations. So let's get into tonight's video. Okay, folks, let's get into the content tonight. After yesterday's podcast, one of the things that is always, I guess, disappointing to me is I don't have the results of our database right now. And those results are pretty significant. And I'll go through the WaveTech database, even though we're looking back on yesterday's run. I'll go through that to discuss what came out of it. And it was much bigger than I thought we were going to see. Everything's been reasonably stable as we've been going forward from the standpoint of a methodical rotation in the database. And like I said, we'll talk about this, but when I see these big giant tranches, I think there was 3,715 sell signals come out last night. When you see this big tranche, that is a material breach where that many symbols are starting to move out of the market. That's something to be looked at, and we'll talk about that here in just a few minutes. But let's go back and just take a look at yesterday. We did see a weaker market. Actually, it was strong coming in, and then we saw that rejection. I told in the Substack, I talked about this last night, that in that around R2, R3, we would likely see a rejection. We got that. We actually traded down into a negative range right before in the last hour, but then rebounded to close positive on the session. But the markets were bouncing fairly good until we saw this heavy selling coming in again. And as I've been talking about for a while, I do expect that this market is going to be locked in a very broad trading range. I think it's going to broaden out over the next several weeks, and that's what I'm going to try to set up here. And once again, I'm advertising the Substack because this is where I put out a free version so everybody could read it. So if you go get a free subscription, you can see what I wrote about last night, and you can also get a 7-day free trial. So you go to kendallreport.com/newsletter, or you can go to kendallreport.substack.com, either way. Anyway, so let's talk a bit more about what came out today after the market was gyrating, traded down into support ranges again. But I'm seeing some really interesting things, and I'm going to set this up real quick. My hope is that we'll be out of here in 30 minutes today. And like I said, the next time that I'll be live, tomorrow's an off day. The next time I'll be live is Friday at 2 p.m. We'll do another live trading session. I've been really enjoying those. I'm going to try to get set up a little better so we can do more trades on Friday. So let's talk a little bit. Mortgage apps came out, minus 0.6, no big deal. ADP at 184, so we're getting close to the employment numbers to come out on Friday. We'll discuss that in a minute. ISM came in at 51.4. It was actually a little softer. It was expected to be 52.6. So metrics are moving around a little bit, but nothing really material. And we are seeing, it's interesting, if you go back and you can watch some of the videos I did. I know I was not that active earlier in the year because I had closed the channel down for about 3 months. But the Substack I've been writing, I've been talking about these things pretty on a regular basis from the standpoint of what's going on. And the rate cuts that if you recall, the market was pricing in 7 rate cuts this year. Remember that? That was part of the rally, I believe, when we saw this huge rally in October, all the way up until current prices. Really, we're still within that sequence, in my opinion. But that was built into the market. All of a sudden, it became 4, and then it was 3. and now it's at 3 right now. And I told you I was expecting 2, maybe 3, and it all depends on the numbers that we see coming out. One of the really complicated things about this year and the Fed and trying to read what they might do and what the significance might be is really the election year. So they don't want to look political. So if they start lowering rates in September, I think the last time they've got a shot here is probably something in June and then something after the election if they're going to do those 2 cuts. We'll see what comes up. But the metrics that we're seeing are continuing to suggest there's actually probably no reason for them to do anything. So, but those are market expectations. Those are the expectations that I have. And I'll just stick with those until some things come up that might lead me to believe something different. So let's talk just a little bit more about the forecast on yields. I mentioned in last night's Substack that I thought we would probably peak out at the 10-year. We'd come back into 4.25. I think we finished at 4.36. We printed I think a little bit over 4.40 yesterday, maybe even almost 4.43, and it came back in pretty good at the end of the day. And I think we'll consider that, continue that. What I'll do in tonight's video is I'll touch on S&P, Nasdaq. We'll probably look at the T-bills or the 10-year notes, and then we'll go into probably Bitcoin. We are seeing a pretty good run in gold as well, so maybe we can touch on that. But for the most part, I just want to keep this really brief and as an update for previous forecasts and kind of a accent to the Substack newsletter that I'm doing every day. So the other thing, as we come into Thursday, tomorrow, we'll be looking at claims coming in at 214 and continuing claims 1.819. I think these numbers are just lock solid here. I had talked, I think maybe a week ago or so, about the potential for employment numbers to uptick to as high as 4.2%. We're coming into, we're coming into on Friday. We're looking at employment numbers really kind of staying stable around 3.9. I don't think they're going to breach 4 anytime soon, especially if we continue to see the metrics that we're seeing in the current environment. I'm just looking at my notes here, make sure I've covered everything. Yeah, so let's go ahead and go into the WaveTech database. I want to show you some things that are happening with the sector rotation as well as the overall database on a short-term basis, and I'll start to tie that together because we won't be live tomorrow. I'll tie that together for as you come into Friday. So let's go ahead and take a look at the database. Okay, so as we look at the database, hang on, I had a crash here. Okay, I'm back. As we look at the database, what we're looking at here, and I'm going to bring up the all stats page here, just so we can get a good look at this. But we had 178 new buys. And then we had 3,735 sell signals. And this is a significant event. As I mentioned a few minutes ago, I really look at when we get these big tranches, and they end up being substantial, mainly because we didn't get that much movement yesterday in the markets as far as the indexes go, but when that many symbols collapse like that, it's going to be a really hard to crawl back and get back into 50 and 60% from here. So most likely what we just signaled was what I've been talking about, going into some kind of corrective phase, but more of a consolidation than a correction. I think the maximum I'll try to lay this out in the Substack. The maximum that we're likely to get to is maybe 5 or 7%. I don't think we get into 10 plus, but anything's possible as we go through in the world we live in today. There's plenty of stimulus around to get the algos to get into the sell mode. And what we saw today was really just pretty methodical, and there was we had the higher prices, and then the selling came in, and then at the very end of the session the buyers were present again. But if we look at the database at 43.31, now I wish the database has not run yet tonight. As you folks know, I'm on Pacific time here, so we don't see that run come into about 9 o'clock Eastern time, and I'll discuss that in tonight's Substack. The question is on the table, is this going to be we're going to drop below 42%, which is one of the key metrics that I talk to you about all the time from the standpoint that the database starts to signal a further liquidation, and that liquidation on the short-term database will go over to the weekly. So I'm going to come up here, just go full screen. You can see it's at 88.53. So I have been expecting 4 weeks now, maybe 3 to 4 weeks, that we would see some attrition here. We start to see some selling coming in, rotation coming into the market from the standpoint of the intermediates, but we have not seen that. So this break in the short term should signal that we're going to get enough of pattern breaks or trend failures that they'll start to bleed over into some of the intermediates. This is going to take a while from the standpoint of trying to go through this rotation. If you remember, we had just about from October until current, a nonstop rally in this really unorthodox kind of pattern. And this just looks like it's going to continue. Now, I went through quite a deal on the Substack on Monday, talking about that the forward-looking part of the sectors in the database still suggests there's a lot to go, but that doesn't mean after this vertical move, you can even see it on this chart here. This is the VPM universe chart, and you can see it's vertical as well. And this is actually index of, I believe, about 1,100 stocks. So it's a very, very broad index. And you can see it just went vertical here, this chart up on the right. But what I'm trying to bring out to you is we should start to see some rotation, and I'll be able to talk about some of that stuff going on. Let me just bring up this chart here real quick, just so you can see this. But this chart up here is actually, let me just fix this scaling. This chart here is illustrating a couple things. That we saw the peak amount of number of longs over here. Now we're not seeing this 80. We're right at this peak again. So typically, once we get to the peak, we'll start to see it fade. But that means that we're more likely of the midpoint of the larger rally than an actual top. So even though we're looking at the potential for this thing to be, for the most part, overdone, or maybe you could call it oversold, but in the view of this database, it does not come into the same type of necessary picture. So I'm going to go back to daily, and just so we can discuss this. I'm 15 minutes in, so that I should be able to get all this covered today. So here's something that happened on the dailies. This was yesterday, and I've been talking to you about how the position is. Right now, we were 12 of 12 long. Now we have 3 that are neutral, 9 that are long. If you look down to the bottom, there was capital goods, consumer cyclical, and healthcare all got sell signals off of yesterday's run. So that, remember, we're looking backwards one day. I'll have this run, I'll cover this on Substack tonight. But the bottom line is we still have a fair amount of these. We've got basic materials is extended. we're getting pretty long in the tooth on energy. And although it's got a ways to go, services is extended. So we still have room for rotation here on a sector basis. So there's two ways to look at this database here. One is the individual symbols, overall percentage, and then you have the sector by sector. And if I click over here on groups, we can actually break down all the individual groups, and you can see performance by group, and you can really start to break down the market. These are all the flat positions, and then these are sells from yesterday. So we had quite a few sells on a group level. So we break our database from sector down to industry groups to individual stocks. So we can actually go through each one of these and break it down. So we're looking, I've just clicked into appliance and tools, and you can see what's long, and then you can also see all the exits. So you have a full top-down view when you're into this database. And when we look at what's going on, this is short-term database, then really what's happening here is we're looking at basically the beginnings of a rotation. If you've been following this channel and you know, especially on Substack, you know we got up to about 70% back in during the rally. We came back in, we went all the way to 48, back to 62, and now we're at 43. So we're definitely seeing some volatility in the database, and this is actually suggesting to me that this type of volatility is important. So just a real quick moment here. So one of the things when I start to see volatility, there's something I know some of you have been in the live trading room. What I look for is frequency of trades. When you start to see not volume so much, it doesn't have to be big volume, but frequency of trades, or you start to see volatility in metrics like this is telling you there's a shift going on. And when these shifts happen, sometimes they're very abrupt, like what we saw in yesterday's run where we had over 3,700 sells. It'll be interesting if this thing drops down below 42, maybe into 38 or less. If we continue to get attrition, that will tell us that a lot of the short-term trends are breaking down. And just to summarize this is what I'm expecting as we come into the intermediates on Friday. We're going to have a potential on Friday night's run to see a reasonable amount of selling coming in to the intermediate database. And that's going to set probably more of it. If we do see that, I'll wait for the data, but I'll cover this on Monday's Substack. But if we do that, we're likely to see more of a potential intermediate top. And what I was discussing in Substack last night is that my expectation is that we go through the next 4 to 6 weeks, could carry into late May. But my expectation, I said, instead of sell in May and go away, it's going to be buy in May and stay. Okay, so buy in May and stay. So it's setting up for a potential summer rally, not the typical summertime blues kind of thing that we get into when the markets slow down. But it's going to be an interesting configuration. It's an election year. There's plenty of things that are going to be starting to come around as we go forward. So let's do this. To finish off today's video, I'm just going to touch on S&P, go to Nasdaq, and then we'll get into Treasuries, and then we'll actually do Bitcoin. So 4 markets real quick. I've got 10 minutes to do it, so let's see how I do. All right, so the S&P is basically doing some of the same things it's been doing. We get 2 or 3 days down, a couple days up. We got 2 days down. We're working on 2 days up again. The algos are suggesting, and this is, those of you who watched my live trading, this is potentially, let me draw this in, this is potentially a V, what I call a V trade coming up, which means that we could trade right back up into this pattern. Even though we got all these sells, that is more of a trending situation than signaling some kind of top on an index level. So you have to remember, this is S&P 500. We basically have a 1500 index. So let's break this down just a little bit. I want to draw this in so you can see this. I think these are these trades that I watch for. You can see I'm just going to draw in here. Here's another one, and now we have a forecasted one that we get. I always say this is almost like having tomorrow's Wall Street. So what happened is we get these little bounces here. I'm going to draw these in because this is those of you that have the indicators. If you don't have the indicators, go to kendallreport.com/indicators and you'll be able to get them there. But if we start to come up here, this is where that V happened, next day rally. Here's another one right here, next day rally. In fact, we got 3 days. Now we've got a potential, another one right here where it's being forecasted to do this. And then we're looking at, this is where this is happening from. So we could head up toward, we still have live Fibonacci targets up here. I'll pull this off so we can get the actual numbers, but there's still some positive configuration. And like I said, my expectations for the moment is some kind of zigzag formation. Question is, do we get to test this 40? Do we do something bigger on the downside? That's yet to be determined. But basically, when I start to see the database pulling back and taking protection, that's something to be paid attention to very closely. So I just want to show you an hourly chart here real quick. And it looks like this is setting up for early in the morning. We've got a little positive for the next couple hours, but it looks like as we come into the morning, this is hourly futures. We're probably coming into this 40, somewhere around the 57.60 level. That'll be the key. So I'm back to the daily, and I just want to take a quick look at the market grid. So 54, S1 54 for tomorrow. That's 52, 54. And then R2 is 52.91, R3 53.04. So it's possible we could trade it into the 90s again, but I'm still looking for rejections or volatility out of that level. All right, let's go to the Nasdaq. So Nasdaq is looking very similar. I just think it's fascinating. It's perfect having these red and blue bars here, but you've got 3 down, 3, 4 up. You got a couple. This has just been the case. If I bring this chart up, this has been how this market has traded this entire year. 2024 starts over here on the right side. We had a little dip into early January, and then this stair-stepping, really, in my opinion, very unorthodox type pattern from that standpoint. But you can just see we're starting to get into potentially just a sideways range. The algos are projecting this. We look at the PPMs, they're all suggesting that just kind of a flattening, no real momentum. And that would go hand in hand with the database kicking out a lot of symbols. What that means is what we don't have is the markets, getting this big sell rotation or anything like that. It's really just a very methodical. The Nasdaq has looked a little bit weaker. And the only thing I can tell you is the uptick, the V uptick is not that powerful. So I'm telling you, if you listen to what I was just saying from the standpoint of the S&P, we're probably going to get maybe a one day bounce there. Okay, so that should be all you get. Same scenario here. Maybe we get a bounce. We still have live fib targets above this market, all the way up at 8 468. So just know that this is really a choppy range, and it literally has been 3 red bars, three blue bars, whatever color you have your bars, positive and negative. It's just been the case. We only got one on the Nasdaq, but we did get a couple during the configuration that we've been watching there. So just know that the extreme right now is 18,157. I also talked about in Substack 18,000. It's 18,024 is a key number in the pattern, and then we still have plenty of resistance overhead. So we're just locked in. I'm telling you, probably the best trades are actually putting in and getting the just doing some straddles on some options and taking this money in that they're giving away on option expiration. All right, so let's go to Treasuries. I've still got 5 minutes, so here we go. So you can see Treasuries, this is what I was talking about in last night's Substack. We've got some big Fibonacci targets up here. I don't think they're valid, but we do see the algos continuing to have a positive upslope here. And so the pattern is going to be held right around the 4.25% level, maybe down to 422. We should just start to consolidate. My expectation is that we'll get a potential turn down in the market grid, which will set up a range, and we should use the 10-period simple as a trend line underneath here, which is right now at 4.27. So that's going to be, it might spike a little bit below, but the algos are suggesting a slight positive upswing there. All right, final market. So Bitcoin, as I announced in the Substack last night, looks like it's finally getting some stability. We did, this is a daily chart here. We got an RTX buy signal, 1 to 2 days sideways. I want to blow up something because this is a pattern that I know I've been teaching you folks about for a while. And as you know, I love moving averages. I hate trend lines. Trend lines don't do much for me. So what I look at here, though, is moving averages that are drawn by the market as the trend line. So I'm going to draw in something here, and I'll show you where I believe we're going to continue to stay. So there's a little triangle that's built right in here. So we're going to stay in this triangle. I'll show you the PPMs in a minute, but the downward slope and angle of attack on the 10, this is daily 10-day, it should hold this market down. The upward slope of this 40 should continue to act as support. So we end up getting sandwiched in here. And let me go and show you exactly what the PPMs are forecasting. So we're still seeing, this is a daily, we're still seeing a downward slope, but if we look at the values, so this is for you folks that have the indicators, just so you know, it looks like it should be negative, right? Well, if you look at the value of the PPMs, you know, they have turned slightly negative, and so that just tells you on PPM1 that that's going to be your resistance point right now. But when we look at come down here to the PPM3, even though it's down below its first and second derivative, it's still positive. It's at 0.58, which tells us that there is better than a 60% probability that we stay above this average. If you look at yesterday's sell-off, we went below it for a second. Today we traded down toward yesterday's low, and now we're rebounding back up. So we should, the pattern should be locked in between, we're just going to round off some numbers, 69.2. On the downside, we're going to have some numbers right around 64. 64,700, we'll call it for right now. We should stay within those parameters. There is some weakening, but most likely these fib targets down here we're vulnerable to this move down. And let me just put those numbers out there. That's 58,720, 53,000 way down here. I don't see these being valid numbers. I think we stay within these numbers here. See what I've got. Right at 30 minutes in this stream. I just want to show you one last thing here, and just get the Substack because I'll cover this in detail later tonight. But this is the pattern I've been talking about from the standpoint of the volatility increase that we got over that big surge. And now what we're doing is consolidating that pattern. And it's important to understand, when I've told you before, when you get these volatility bubbles on the market grid, they have to collapse back in before we'll get the next movement. Now, the algos are suggesting that we're going to go down substantially. But once again, even if I come over here, the algos are still in a 4-point something handle. And 0.25 is a trend. So you can see the slope of the 10-period moving average here, the white line. That is still climbing all the way into the final week of April. So we still have this upward slope. So we should continue to consolidate. We should continue to see the volatility contract. Okay, folks, I'll come back on screen. That'll do it for today. Just remember, the next time I'll be live is Friday, and that will be at 2 p.m. Eastern time. It'll be live trading. We'll probably start off with some sort of review of the markets and those type of things. But the midweek is really an update. I said I'm pitching a Substack. It's $8 a month, okay? And we've got a lot of folks that have already signed up for it. And for the microanalysis, I do my best to kind of write up things that are important. The big reports are typically on Monday, and then during the week, I'm updating just markets that deserve more attention. I'll put that out there. We're still seeing, probably at some stage here soon, I'm going to have to cover the U.S. dollar and the dollar yen. I'm still watching those situations very closely. So far, they've been reasonably under control. Anyway, folks, as always, thank you so much. See you Friday live during the market hours, 2 p.m. Eastern time. We'll see you there. Have a great evening. Good day trading tomorrow.